Hawkish Fed and surging global oil prices sink Wall Street to new lows. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 closed down 18 points to 6,606. The Nasdaq Composite lost 62 points, finishing near 22,090. The Dow Jones Industrial Average dropped 200 points, ending around 46,022. The Magnificent Seven faced heavy selling pressure. Apple, Nvidia, Alphabet, Microsoft, Amazon, and Meta all closed in the red, with Tesla suffering the steepest drop at over 3%. Energy was the lone winning sector, surging over 4% on rising crude prices. Conversely, consumer discretionary, financials, and airlines cratered as rising fuel costs weighed heavily on profit outlooks. Bitcoin slipped to $70,500. Gold plunged 5% to $4,660 an ounce, and silver tumbled 6% to $73. West Texas Intermediate crude oil remained elevated at $95 a barrel. Today's retreat was driven by a hawkish reality check from the Federal Reserve. The central bank held interest rates steady at 3.5 to 3.75% and updated its dot plot to signal only one rate cut for 2026. They also raised their inflation forecast to 2.7%. This higher for longer rate outlook crushed non-yielding assets like gold and triggered a sell-off in growth stocks. Geopolitical tensions further inflamed inflation fears as the conflict in the Middle East intensified. Iran launched attacks on critical energy infrastructure in Qatar, severely disrupting global liquefied natural gas supplies. This sent Brent crude briefly surging past $119 a barrel before receding. The combination of soaring energy costs and elevated rates stoked severe stagflation fears, prompting investors to dump travel stocks and crowd into the energy sector. The 10-year Treasury yield rose to 4.25% and the 10- and 2-year yield spread sat near 31 basis points, while the US dollar index held around 99 and the VIX hovered near 24. This across-the-board dynamic signals that traders are demanding higher risk premiums, as inflation concerns completely overpower any flight to safety demand for bonds. The CNN Fear and Greed Index dropped to 17, signaling extreme fear. This indicates market participants are highly anxious about sticky inflation and supply shocks, driving capital out of risk assets. Looking ahead, the market outlook remains deeply cautious. Investors are trapped in a stagflationary environment where escalating geopolitical risks threaten to keep energy prices high. This limits the Federal Reserve and compresses corporate valuations, making defensive positioning the priority. In the coming days, traders will watch the Bank of Japan interest rate decision for monetary policy clues. We are also expecting corporate earnings from FedEx, which will reveal how global shipping is handling recent disruptions. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.